Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. At the outset, a big thank you for the overwhelming response that you gave to our previous videos. It boosts our confidence that yes, the work that we are doing is on the right track. To reiterate, the videos that we make are for educational purposes. These are not stock recommendations. These are based on study of several news reports, company con calls, and their fundamentals that we put forth in our videos. Before investing, it is always advisable that you do your own research and consult an investment advisor for the right advice. Okay, so let's start with today's video. Today we are going to discuss HAL, Hindustan Aeronautics Limited, the resurrection of the defense giant. From being a non entity to being one of the biggest companies in the defense sector, we will today discuss the journey of HAL, what its future looks like, and what value it holds for investors. So let's begin. Established in 1940 by Valchand Hirachan in collaboration with the government of Mysore, HAL initially began as Hindustan Aircraft Limited in Bangalore. It was taken over by the government of India after purchasing the stakes of the promoters and nationalized in 1942. During the Second World War, the factory of HAL was used by United States Army Air Force, though the management remained with HAL. Now, after 1947, when India gained independence, the management control entirely passed on to the government of India. It was constituted by law on 1st October 1964 through the amalgamation of Hindustan Aircrafts Limited and other aerospace entities. Though the company made early strides with indigenous projects like the HF Marut, for decades it primarily focused on license production rather than innovation. That explains its laggard performance for all the years until the resurrection in recent times. For decades, HAL was marred with efficiency issues, delays in project execution, and limited order book growth. It was yet another underperforming public sector undertaking. However, the post COVID era brought a remarkable turnaround in HAL, driven by India's push for defense self reliance under the Aatmanirbhar Bharat initiative. The company's operations expanded significantly in the 1980s with the development of indigenous platform like the HAL Tejas light combat aircraft and the HAL Dhruv helicopter. This set the foundation for future growth, but the real transformation began only in recent years with substantial defense orders. HL has had a financial renaissance in recent years. The financial matrix tells an impressive turnaround story. Revenue has grown consistently to reach 32,050 crores for the trailing 12 months period. Operating profit margins have improved to 32% in the trailing 12 months compared to 25% in March 2022. Net profit has also surged to 8,651 crores for the trailing 12 months compared to 5086 crores in March 2022. Earnings per share have also dramatically improved from 76.05 in March 2022 to nearly 129.35 for the trailing 12 months period. Looking at its quarterly performance, HAL has reported a revenue of 6,957 for the third quarter of financial year 2024, which is a good 15% increase from the same period last year. Net profit was recorded at 1,433 crores, though the net profit margin has slightly dipped from the previous quarter when it was recorded at 1,490 crore rupees. Now, if we go through the historical financial data of HL, a clear trend is observed where the net profit figures for the March ending quarter are significantly higher than the previous quarters for any particular given year. Now, take for example, for the March 2022 quarter, the net profit was recorded at 3,102 crores. Compare it with just 938 crores for the previous quarter, which was December 2021. A similar trend was observed for March 2023, where net profit was recorded at 2,841 crores. For the previous quarter, December 2022, net profit was 1,154 crores. Now, the previous year for March 2024, net profit stood at 4,292 crores. December 2023, it was just 1,254 crore rupees. So, for the December 2024 quarter, the net profit was at 1,433. What significant surge we see in the March quarter is for all of us to keenly observe when HAL declares its quarterly results. Now, some of the reasons why this trend is observed is firstly the fiscal year end effect. The March quarter end represents the end of the Indian financial year. So, many government departments and other clients typically accelerate their spending to utilize their allocated budget amounts before the March 31st fiscal year end closure. Correct. Secondly, there is always a dramatic sales increase which is observed for the March quarter. Like in March 2023, the revenue, the sales figure stood at 12,495 crores compared to 5,666 crores for the December 2022 quarter. Likewise, for the March 2024 quarter, the sales figure stood at 14,769 crores compared to 6,061 for the December 2023 quarter. Also, it is observed that the company achieves significantly better margins in the March quarter. For the March 2023 quarter, the operating profit margin stood at 26. For March 2024 quarter, it stood at 40%. So, this suggests better operational efficiency and a more favorable product mix during this period every year. As a defense PSU, HAL likely sees accelerated order execution and deliveries timed to coincide with the government's fiscal year end procurement cycles. So, this is also one of the reasons why we see heightened net profits for the March quarter. The balance sheet of HAL is robust. The company is virtually debt free with its borrowings for the March 2024 year ended March 2024 standing at 49, whereas for September 2024, 6 months after that, the borrowings were zero. The company is debt free. Correct? It has substantial reserves standing at 30,751 crores as of September 2024. The total assets of the company stood at 86,399 crores. Now, this financial stability provides HL with the flexibility to invest in innovation, R&D, and capacity expansion while maintaining healthy dividend payouts to its shareholders. A quote by Charlie Munger comes to mind: value investing is acquiring more than what you pay for. So, what is the value in HL? Well, the most compelling aspect of HL's investment case is its rapidly growing order book. In February 2025, the chairman and managing director of HL, DK Sunil, announced that HL's order book is set to reach 2.5 lakh crore rupees in the next 6 months. HL secured the largest defense order ever of nearly 62,700 crores for 156 light combat helicopters named Prachand in March 2025. This is the largest defense order ever received till date. 66 of these helicopters are for the Indian Air Force and 90 for the Indian Army. Deliveries for them will commence from 2027-28 and continue for 5 years after that. The Ministry of Defense has directed HL to deliver 12 Tejas aircrafts in 2025, scaling them up to 20 annually from 2026. HL is also nearing completion of the first Tejas Mk2 aircraft with over 60% assembly completed and full completion expected by October 2025. The light combat helicopter deal represents the largest ever order for HL and will involve over 250 domestic ancillary companies, creating approximately 8,500 direct and indirect jobs. What does the future look like for HL? Well, HL is positioning itself for sustainable long term growth through several key initiatives. Firstly, it is working on multiple indigenous platforms, including the Advanced Medium Combat Aircraft, twin engine deck based fighter, and Indian multi role helicopter. It has also entered into a joint venture with Safran Helicopter Engines to design and manufacture helicopter engines in India, and a collaboration with GE to produce GE 414 INS 6 engines with 80% technology transfer. HAL is also aiming to increase exports of platforms like ALH Dhruv, LCA Tejas, DO 228, and upcoming HTT 40 and light utility helicopters to friendly countries. Investments in innovation and R&D for artificial intelligence, autonomous systems, and green aerospace technologies is also on the radar. HAL has also established dedicated assembly lines for Tejas in Bangalore and Nasik, each capable of producing up to 8 aircrafts annually, and its expansion to meet the targets of 20 aircrafts as per the government orders. HAL stock is currently trading at 4,170 levels with a PE ratio of 32.31. While this valuation might seem expensive compared to broader market multiples, it reflects a strong growth expectations. Now, analysts have given a strong buy rating for HAL. Jefferies has maintained its buy rating with a price target of 4,715, suggesting a 21% upside trend. Morgan Stanley is even more bullish with an overweight rating and a price target of 5,292 rupees, indicating a potential 32% upside. The stock has gained approximately 28% in the past month alone. The shareholding pattern of HL reveals institutional confidence, with FII holding increasing to 12.26 for the December quarter and DII holding standing at 8.13. The government maintains a majority stake in the company with a stake of 71.64%. No company operates in a vacuum. All of them face risk and challenges. So, what are these for HL? Firstly, HL has faced production delays in the past, such as revised delivery schedule for Tejas Mk1 FOC fighter jets. As seen with GE engine delays impacting Tejas deliveries, HAL remains dependent on global suppliers for critical components. Changes in defense policies or budget allocations could adversely impact the order flow for HAL. Growing private sector participation in defense manufacturing could challenge HAL's dominance in certain segments in the future. So, these are certain risks and challenges that the company faces and which we as investors should be aware of. To conclude, HL represents a compelling investment case in India's defense sector. The company has successfully transformed from a struggling PSU to a profitable, technologically advancing defense manufacturer with a robust order book and a strong growth prospect. With India's push for defense self reliance, HL's strategic importance continues to grow. The financial strength, order book visibility for the next 5 6 years, and focus on indigenous development all suggest continued momentum in the company. While valuations may appear rich by traditional metrics, the visibility of future earnings through confirmed orders provides some justification. For investors with a long term horizon seeking exposure to India's defense sector, HAL offers a unique combination of established operations, technological advancement, and robust government backing. The company's journey from dust to dominance represents one of the most remarkable turnaround stories in India's public sector landscape. So, this is HL for you. This video, as I reiterate, is for educational purposes only. It helps you understand the direction in which you need to study HL if you are planning to invest in it. Also, seeking expert advice for your investment needs is always advisable. If you have liked this video, please like, share, and subscribe to my channel for more such educational content. Until next time, stay safe and happy investing.